Good morning, guys. Good morning, good morning, good morning.
Mhm.
How's everyone doing? And where y'all calling in from?
Calling from London.
London in the house.
Hey, there's one guy that I want to big up, yeah, just for his chair.
All
Mr.
right.
David, Mr.
I
David
was just
Tilley.
speaking, he's always on here first.
Hey, and his chair is so comfortable. He's got the cushions and that, fam. Hey,
I
that's
know.
that's
That's funny. I love it.
hey, Mr. David Tillis, big up, big up, big up for that chair, man. I'm gonna check on Amazon. I'm gonna try and get that same chair, man. That chair looks too comfortable.
Look, that's CEO type. That's the CEO type chair.
Yeah.
Big money chair. Yeah.
Big money chair, of course.
Liverpool, UK. That's what's up. Hey, Robert.
All right, what's good, everybody?
Netherlands in the house.
So I did not know you could see me. That's crazy. We've been seeing you the whole time, every session.
Yeah.
Every session, bro. He be on there first. I love it.
With that comfy chair, fam. That's super
Hey,
comfy. I'm gonna get that chair, That chair is super comfortable, man. Check on Amazon, fam.
Definitely looks fire. I can't lie. Definitely looks fire.
It's a
lady boy. You got your feet kicked up. Actually, yeah, I've seen a chair like that, and she could. I was like, I would never get no work done.
What you mean, Bridget?
There's a chair, there's a trading chair or like an office chair that you literally can lay down in. It like reclines all the way back. It's got like the footrest and everything.
Yeah, fire.
uh,
I might use some type of chair like that.
you want to wake up trading.
Get like a
Wake up.
chair.
You will wake up coding though. You'd be like, oh yeah, I got an idea.
Nah, the things I already got like a very, very comfortable chair, so I'm chilling.
Mhm. Who all on here has gamer chairs?
Oh yeah, mine is one.
Okay.
Can we start with gold? Somebody said.
I think that's
We'll wait a couple more minutes before we start.
yeah, maybe like 5 or 6 after, something like that. That's about what time you normally start.
Yes. How's everybody doing though? Let me know in the chat box. Like, is y'all good? Trying to see real quick. Everything good. Let's see. All right, Rocky says good. Everything going good. Perfect. I'm doing blessed. Thank you. Thank you so much. I'm blessed. All good today. Let's go.
Hopefully nobody's in the path of the hurricane that's coming up.
What do you mean?
We have this hurricane season. But it's a hurricane. It's always like they had one like a week or so ago, and then there's one coming. It's coming up the coast, East Coast. So on the north side. Yep. It's actually called Lee. I think the hurricane is called Lee. Hurricane Lee.
I'm here anyway.
Damn, Lee Page.
Is messing up stuff.
Lee, you start rolling like that?
Yeah, Lee got the hurricane. Mm-hmm.
Picking up a storm.
And for those of you that were asking, Lee's going to do the training on the order flow today. Are you? I mean, that's right, Lee?
Yeah. I haven't really got any trades set up at the moment. We've got a lot of news coming, so I was just going to geek out on the charts and show you how I look at order flow.
Love it. That was a
yes, sir.
Okay, that was good. That was good stuff.
What up, General Finch? What's up, Ahmed? How are y'all doing?
What up, Jay?
Should we wait like 2 more minutes and then
You
know,
normally
these-
start
Yeah,
about
yeah.
8:06. That's you normally start about 8:06, 8:07, something like that.
We got. Do we have co-host?
oh yeah, we do. Do
Oh,
we?
my
I don't
bad,
know.
my bad.
No, no, I don't.
Are we not?
I got you one
Did-
second.
Red's trying to keep it all for herself.
Nah, bro, that ain't me.
Nah, it's all good.
So co-host.
So somebody asked, what trades are you in? Right now, it's just
VJ.
Lee. Are you in
Um,
any trades?
I came out of EG. I took partials and then it came back to break even. So I came out of that because news is about to hit. And we've got big news today. We've got Euro interest rates and then we've got USA PMI, jobless. Yeah, it's going to be a meat grinder. So I will not trade until an hour or two after that. But I think SM's got some setup. So I've been out this morning. So I've not been able to do much. But I'm looking at an NCAD potential scalp down on the 5 minute. Like I said, with news coming up, I'm probably not going to enter.
All right. You want to start now? Mr.
How many people we got up?
Leaf.
About 40.
About 40? Yeah, we may as well start. Let me just share screen. Unless
Alright,
anybody
let's
else
go.
wanted to, anybody else wanted to show anything first before I start?
No.
I don't know anything.
I think SM said he had a couple of things rocking.
If
Yeah,
oh, go ahead.
Hold on, I want
Yeah.
to say one more thing before we really get started. For everybody that's in here, actually really pay attention to that, like to the session today, because Lee Page is going to go through order flow and how he sees everything. So definitely make sure that you guys really pay attention, and if so, even like start taking notes and all that, because he's really about to drop some stuff today.
I'll make sure I drop it in the chat so you don't have to even ask. I'll make sure I drop this in the chat.
Sorry, SM, did you say you wanted to drive for a moment? You got anything you want us to look at?
Yeah, just a quick one. One sec. Let me just.
Okay, I'll just do NCAD. Oh no, you carry on, mate. I'll do NCAD after.
Oh, cool. Just a quick one for you to take over. So what I was looking at was GN. Obviously, on a monthly, we've still got this imbalance candle. So I'm thinking the market is gonna fill out. It's gonna finish filling out this big bearish candle. So on a weekly, we've been dropping, we've been going bearish, and then I think recently today, I saw that the market made a new a lower low. So I'm thinking to obviously take this down to at least maybe another 80, 90 pips. So for entry, cool. For a entry, I was thinking anywhere, if I use my fibs from high to low, anywhere in this premium zone right here. So, okay, cool. So I'm thinking, obviously, if the news comes and then the news just wicks and then it will continue back down. So I'm thinking, obviously, for like a tight stop loss, I was thinking maybe something like this, like a 20, maybe like a 30 pip stop loss with like a 90 pip. So basically, like, that's not even 90 pip shit, that's 140. So that's like a 1 to 4, if I'm correct, 1 to 4, 1 to 5. So the zone that I will be looking at for maybe like a sell limit is around 2.10900 area. That's where I'm gonna set my sell limit for. That's GN. GA, GA is in a good zone. We should be going long from here anytime soon, but I will wait to see some form of like a choke happening. So the market drop, market push up, something like this. And then for us to continue going long. I had another one, like a teacup. Which one was it? Oh yeah, CAD JPY. Don't sleep on CAD JPY, because obviously on a weekly, was it the weekly? The weekly, the 2 days, 8 hours, 6. Anyways, on a weekly, we had this accumulation right here, and then obviously market broke out of it, and then now market is pulling all the way back up to the zone. And with this zone, I have this in my premium zone. So if the market comes to this zone and this zone actually holds, we could potentially get a sell from around 1.90400 or maybe 1.90500 area. So CAD JPY, look out for the zone as well to continue to take taking CAD JPY down. Was it CAD Chef that there was a teacup? Yeah, the others I'm not really too sure about them. AU, I've got the zone. Well, I'm not 100% on AU. Old Chef is also a good one. If this zone holds an Old Chef, because obviously we have had multiple break of structure right there, and another one. This is all like high time frame break of structures, and obviously the market's pulling back up to the zone. So if this zone holds and it gives us a choke in the zone, this will be a good zone for us to eventually continue the downtrend that Old Chef has been on for many years, it looks like. So yeah, so and Old Chef, I have Old Chef to go down to obviously I drew this pattern. I have it to go down to at least the 786. I mean, no, it's at the 786 now, at least to the 886, which if that zone holds, that would be another at least like 100, 200 pips. So that would be a nice ride back down, but I'll keep an eye on that for everyone as well. But the only one that's good enough was this GN one that I saw. So yeah, I think that's it still, man. G.
It looks like we could get some nice moves after the news again, like last week. So maybe late morning, late afternoon, Europe.
Yeah, so maybe like 2-3 hours after the news, we can obviously recheck the market, and we'll go and then we'll see what other good setups are there. But yeah, but this GN one, around 2.10900 area. If we get that entry, we can ride that back down. And then if the market breaks this new low that the market just created, we can get another re-entry. So if the market does something like this, breaks it, we can get another re-entry, stack it to continue taking back down, because I am sure that this monthly candle is definitely going to get filled out. Like if you look at the others, like the previous months, all the candles are all filled out. Left, right, left, right, left, right. Like every candle is all filled out. So you just follow the market in it. So this one is definitely going to get filled out, but we just need a nice entry for us to get in and to continue to take that down. But yeah, so yeah, man, let's see if the news wicks us in, and yeah, we'll be good. Mr. Lee, Coach Lee, you can take over now.
Thanks, right.
Certification part, man. I mean, can you explain a bit for some sniper entry how to use fibs or something else, please? There's like grandparents of forest, the need one somewhere.
I agree.
Chef pairs are awesome. You only need 5 to 10 pip stop loss, and you can get 1 to 6 easy. They just fly. You just have to wait for them to turn over. I'm creaming the chef. So N chef and A chef. Been taking it down for forever.
Yeah, literally, and CAD Chef as well. That one.
Yeah.
That one's
when they move great. They're good because they follow fibs and Elliott Wave and structure really nicely. You can just predict them quite well. Anyway, I'll just show you NCAD what I'm looking at quickly. Like I said, we've got news coming up, so it's already reacting. I'm not going to take it. It looks nice, but just quickly, I'm looking at 5-minute scalp off source 400. So we've got a nice trend line here. Nice correction breakout.
It was just going crazy. On EU. EU just waked up straight up.
It's the what's it called? And we just had news drop.
I think it was
Euro news.
Yeah. I'm in a long-term Euro chef buy, so I hope I'm lucky.
That thing's tanking.
It looks like I'm gonna be lucky as well. Anyway, back to it. So yeah, NCAD, nice correction here. Break out of a nice clean correction, nice channel, nice roughly retrace up to the 50%, and my entry model, which is break and retest to the 400. And then what I was looking for was the cloud move up, get thin, and get a nice entry model here. So either using your shift candles or using your type 1 or type 2. But you'll also, on the lower time frame, have had a small internal choke. So what I'd be looking for would be breakdowns here, placing the lows, retrace up, and then entry. But with news coming up, I think this is likely going to get violated, and we're going to push up and grab some of the liquidity on the high before it shoots down. So, order flow. I'll show you what I do. If I'm breaking down the charts from high time frames, is there any pairs that anybody wanted to look at? Favorite pairs? Gold, maybe?
Hold
Broke down
on.
gold for a while.
Make actually sure that everybody gets their pens ready and and start drawing
We're going to record it anyway, so it's recorded. It'll be posted in the chat.
Make sure you take notes, 100%.
1 second, guys. I just need to manage my.
My trade, I was in US 30.
I need to manage my eChef trade.
Yeah.
I mean, for those
Look
who
at that.
don't know,
Sorry, I'm just gonna look at eChef.
For those who don't know, Lee Page actually had a one-on-one with Manny, and he was just asking him about order flow. So he definitely knows. Lee Page really took some great nuggets. So, Lee, when we had that challenge.
Yeah. That's how I really got to know Manny. I think we did like a 2 or 3 hour order flow session initially, and then I've just been sending all my charts and just been helping me ever since on the order flow side. And to be fair, once you get it clear and you start practicing on the higher time frame, it's really fire and it's really easy to do. It takes a little bit of practice. Once your eyes start seeing it.
Make sure you pay attention, guys. I'm telling you.
I'm slightly distracted. I'm just watching eChef fly. It's enjoyable.
Okay, cool beans.
Oh, so did we got somebody? What did we have? Anybody wanted to check gold? I can't get my chat up for some reason. There we go. Yeah, gold.
Yeah,
I think everybody's a big fan of gold, aren't they? Let's do some gold.
Yes. U30.
That's mad. Gold is pushing up, and the DXY is also pushing up. Makes no sense.
Well, nothing makes any sense. Let's clean up the
Bridget,
charts.
Yes, sir.
you will post a recording in the chat, right?
Oh, I already said that. Yep, that's what I told him earlier.
My fault.
No worries.
So, I'm slightly distracted. I always like to start on the weekly or the monthly just to get an overview. Like SM said, where is the market going? What's the general direction, general feeling, sentiment of the market? And with order flow, sometimes the market's just a mess in certain areas and you can't figure out the whole order flow. So if you're unsure, just start in the immediate structure. But if you can see overall order flow, I like to start from as high as possible. And I just start by finding the first major high-low and going from there. 2 key rules with order flow about setting your high or your new highs and your new lows. First thing to know is your new high or low will not start to be set until this range is broken. So this is the current range that we're in. So as that starts to break, most people will instantly call that the new high. And effectively, until we break back into the original range, the new high is not set. So all of these really painting new highs, but until we get a nice deep pullback, I would not class that as being set. So ideally what I'm looking at is a pullback to the 50% or into the premium zone. So key areas you're looking for. If this pulls back to the 50%, or into your discount zones. That will be your new high is set. That's the general base rule that you want to look for with order flow. Break of the range, retrace back into your zone, and then 50% or your discount or premium if you're doing. Obviously, if you're in shorts, you're in a downward order flow. A key thing to remember with then that carries on. Sorry, the key thing to remember that once that low set, that low will not hold until you break this high. So once you break that high, that's when your new level low set. So it helps when you start on the high time frames to remove a lot of the noise and get the direction of the market. That's just the key thing to remember. With order flow, it's probably the main thing you want to remember is you've got to break the range and retrace back into it, and then your key fib levels, which is your 50%, and then your premium and your discount zones. So I've got my first high and high low. I've got an upward order flow that's being broken, so we're potentially gold looks to me like it's going to carry on up. I think we'll get a deep retrace, but I'll show you how I go about setting up potential levels that I'm looking for. Now, I think I mentioned it last week, but my two key areas are the 618 and the 1.272. So these are going to be my target zones. Well, that's the first two target zones I'll be looking for. And then retracement zones, I'm going to be looking for the 50% and the discount areas. In order to strengthen the zones, just look at volume from the high to the low of that swing. My volume not working for some reason.
Oh, remember on gold, one of the golds it does weird things. You have to find
This was the gold, the FX Open I can use volume on, so I'm not sure why that's not working.
It mine started.
Just my PVP periodic volume profile is working, so I'm not sure why that's not working. Anyway, we can see a good idea of where the volume is. There's clearly a lot of volume across this point, and I would be looking at this zone from the 50%, and then probably these two zones. So on the higher time frame, that's how I start looking at where I believe the market's going to go based on order flow. So ideally, I'd like to see gold push up one of these two zones. The 1.2 is my favorite really for order flow movement, and then retrace back down one of these zones. So that's sort of how I like to look to see where is the market going, where am I going to look for primarily to take the market. So currently at the moment, overall, I'd like to be taking gold up to this zone and then bringing it all the way back down to the 50% or the discount. And then what I usually do is I like to go down, just down the time frames, usually down to the daily and 4 hourly, and just look internally what's happening. I also, like I say, I find it easier to keep on the high time frames initially, just to get the general direction of the market. If you drop down to the 4 hour or the hour and try and start look at order flow initially, there's a lot of noise on the market, hard to practice, do get confused, there's a lot going on. So just to get used to it, stick to the higher time frames. And then what we'll do is as we get lower down and we're looking for entries, we'll mainly just look at the last swing, the last one or two swings. Another thing that helped me initially was drawing on the waves. Just literally following each wave that each high, low, drawing a little line on a big line, the major swings.
Yes. I took that wild ride of US 30 up.
Nice.
That was crazy.
Tricky over here. If you can't really find a nice order flow on the high time frame, I just move to the current swing and look at what's happening. So initially here, when you're following true order flow, and you're looking for that choke, ideally you want to be making sure that you have got the high highs to confirm that the market's turning around. High, break. It would break here, and this is a high. Effectively, it hasn't really pulled back into this zone. So we haven't really got any order flow. So you'll get into that situation where you can't really follow order flow to the rules properly. So in that circumstance, just move on. You've got your big order flow swing, move on, look at the next big swings in the market. Until this low is broken, or until this high is broken, we're setting new high highs. So in that situation, sometimes the market's just too messy to follow. You better just move on, look at your main swings, and look at the internal. So otherwise, you'll be looking for days and trying to over analyze when effectively, when you've got the main direction of the market, you don't need to worry about all of these swings. Let's look internally to see sort of where we're at now. So I've got high was broken. We've had a deep retracement. So come on, Bridget.
I've heard people call those swing, well, many even on the higher time frames, those are the swing points versus the pivots within the.
Yes. Yeah. Basically, you've got your swings and your internal swings or your pivots, and each time frame that you go down, you can follow those further all the way through. That's why chokes can catch you out if you don't look at the high time frame soon, because you might see a choke and think the market's going to reverse. Well, actually, all it is just an internal pivot in the market. It's just doing a small retracement. So that's why I like to look at least on the daily at the current structure, try and find out where the market's going, and look for the key points that the market will reverse, the key choke areas. And as you start to see them.
Do you do that for every single pair whenever you're looking for order flow? Is order flow something you look for at the beginning of the week, or is this really a daily thing?
I used to do order flow on all pairs, and once you've done it, then you just update it as you go. But at the moment, I'm doing a lot of 5-min scalping, so I usually just look internally at the current order flow. But I have started this week doing order flow again because on the high time frame, because it's great for finding key zones in the market, trade off and get those really, really big, nice moves.
Look at GN, go grow. Sorry, distracted at Florence chart.
Flying. Oh, it is, yeah.
Dang, how many pips is that? Sorry.
Carry on. I got distracted as well.
Lauren, did you take that?
It's
37 pips.
No.
37 pips.
Hold on.
Well, I'm so glad I got out of the E30. Sheesh. 38 pips.
So there's a good example here. Sorry guys, we're distracted by the trades. There's a effectively, you can see this, we've had a nice choke here. You can see that.
Mm-hmm.
A nice choke, nice break of the low, and a retrace up to the flip zone, which is a lovely entry on that flip zone. Let's have a look on the high time frame. But when you look on the high time frame, still making new high highs and high lows. So what this says to me is I feel that we will get, I'll show you why in a second, we'll get some sort of smaller retracement, we'll boom up, we'll grab one of these fibs, and then we'll come down one of these zones before it potentially carries on up.
Right.
So if I'm just doing order flow on the current structure, I'll be looking at just the high highs and high lows following the normal range breaker being broke. So break the lower low. See how here we set a new lower low, but it doesn't fully pull back into the range. That's 50% is usually the previous swing, so that's ideally my target I'm looking for. So realistically, I would count that because it's so close. So if you can't make it work perfectly, but it comes up to almost 50%, I will use that. Now that 50% is a good go.
Do you ever use the 38?
Not for order flow. I will sometimes in here because it doesn't always follow the rules of 50% and the discount or premium. But the 50% pullback to the range, like hitting the 50% or where the last range ends, that is quite key for order flow. It doesn't always work internally, but on the high time frames, you will be able to make it work. But
I was wondering, like last Elliott wave that says it, normally has the shallow pullback on the 38. And I was just kind of curious. That's why I was asking.
Yeah, when you get in a really nice fast trending market, it will not always pull back because wave one has to pull back a minimum of 50% of wave 2 has to pull back 50% of wave 1. But wave 4 can just, wave 1, 2, 3, sorry, wave 3.
Yeah, you're right. Yeah, 4.
Yeah, it's 1, 2, 3, 4. So wave 4 can pull back like less, or only a maximum of 50%. So that doesn't always retrace right into deep order flow. So but normally what happens is with the way order flow works, you'll get your 1, 2, 3, 4, 5, which is here. You got your 50%. You've got your extension to 1.618. So I wasn't going to do Elliott waves, but it's important that it works with order flow. Then you got your 1, 2, 3 down to the 1.618, and then that'll be a retracement of up to a maximum of 50. So between the 1.4 and the 50, and then this is usually an extension up to about 1.618. There's a number of ways to do this, so it's usually an extension of wave 4 up to a maximum of 1.618, 1.2 to 1.618. But it can also be the same as wave 1, I believe, or an extension of wave 3. But as a rule,
that was
this is the second wave. I usually use wave 4. You can get an extended final wave. It's normally wave 2, but you can get an extended final wave up to around 2.16, 2.618. So that is when usually order flow doesn't count or doesn't follow, and we've got an extra wave here. So this was a 7 wave.
I was trying to figure out if that was 50% pullback or 38, but it looks like more of a 50.
Which wave 4?
That last one. I was actually 7. 7.
So that was just almost at the 50. So and then 7. Wave 7 was
the extended wave. The 7.
This is the extended.
Yeah.
5, 6, 7.
Don't really see that a lot, huh?
No, you see it more often now, to be fair, a lot more often than you used to. So that's a 7 wave, but the order flow, when you get a nice fast Elliott wave where order flow will not be followed, you will usually get your correction, which will come back in and complete the order flow. So you'll have your big move and then your correction, which will then solidify the order flow moving forward. But let me take out all of the Elliott waves.
Yeah, gold is
So-
going crazy. Let's see.
1 second, I need to take some partials on right.
Yeah, I got my.
Sorry. Once I've got some partials, I'll be with you properly and I won't be distracted. Just gonna leave one lot on that.
I think this should be the 78 that gold is hitting on that 15-minute.
I will have a look at gold in a second. Actually, I've not done this on gold for a while. So we've had a check. So yeah, this is what I'm looking at. This is why I like to look on the high time frame to confirm when the market's actually changing direction. Because when you zoom in and we go down time frames, there'll be small little chokes and it doesn't confirm the market's changed direction. But what I know with order flow, that we're looking for this high to be broken to confirm the market's really going to make a nice move forward. So at that point, there's your last high. That establishes a new low, low. Once that previous range is left, and now it pulls back up. It doesn't make a new lower low, so that is not a new lower high. That's not a genuine high. So a lot of the time, when you're doing order flow or you're looking for a high to be broken, to confirm the market's actually going to move the other way, it's actually not the one. This is where a lot of time it's hard to see which high confirms the market is changing direction and why a choke doesn't hold. So if you go to the high time frame, and even if you look at the last 2 or 3 swings, you'll be able to see, or at least be able to give you an idea of what key highs and lows you're looking for to be broken. So that was the confirmation for me, that being broken, that the market's now going to boom up. So in this instance, I think we might have traded this. When was that? March 23. Yeah, I think we were trading this. You're looking for your fib levels to be hit, the order flow rules to be met. So I'm going to look to see where this is going to extend to. At the point that starts getting broke, I know that's holding. I will do the last swing, and I'll be looking for, as I said, the 1.2. Can't do the volume, can I? So there's volume around here, so I'd have been looking somewhere around there to line up with the fibs, and then.
Hey Lee, also you might want to look if your volume profile thing, maybe the visibility is not on that one, maybe. I'm not sure.
Oh, it's working again now.
Okay,
So
good.
you can see I do that. So this is what I would do, is I would try and match the fibs and the volume off the last swing. So that's perfect. So they're the 2 key levels. So we can't see the market if we're here. So we've just had a choke, we broke that. So now I'm looking for, where is the market going to reverse? Where is the market going to reverse? So it's one of these 2 levels. So when I'm trading on the 1 hour or the 15 min, these are the 2 levels I'm going to be looking for entry. And then in order to see where the market's going to retrace to, I will be, let's clean this up so it's clear, otherwise it'll get messy. Turn off replay.
That was perfect.
Yeah, it came right up to it. We had, when you zoom in, you had trade opportunities, nice trade opportunities, good retracements off both levels. And you see that huge consolidation, that would be a sign to me that we're going to get a nice, decent pullback. So, as a rule, it's essential, really, for order flow to continue, that at least that last high is hit or broken. Perfect rules, Manny always said, the 50%. See where all that consolidation is on the 50% happens often. 50% there, loads of consolidation. 50% of that one, loads of consolidation. So there's just key areas in the market, and if you just follow the 50%, the premium, and you discount for order flow, that will really help you see sort of where the likely areas are in the market. I would have been looking at this volume zone. And then see there's volume built up down here. There's a nice point of control developing, and we've got fibs. So that would have been a secondary target.
Okay, so you use it for your entries and your exits. Nice.
So I just basically, all I'm doing is I'm looking to see where the market's likely to push to in the key areas and just increasing that with fibs and volume. Now here, you see they've got a huge chunk of volume all along, although that's the point of control. When you're actually looking for the perfect zone, because it doesn't always follow rules, I will normally usually add two. Let me put the fibs back on. Good rule of thumb is just to sort of look at two potential areas and the highest volume. So that's the one. So we've got the 618 and 32. So I probably wouldn't have been looking for that zone, to be fair. I probably would have missed that trade until you start looking closer, and then you start to look for your order flow again on the internal. And if you're looking for your order flow again, it's quite difficult. So if you're following pure order flow, you would have struggled here because it doesn't pull back up into the range. And it's not even an Elliott wave. That's just a huge first wave drop. Really hard to follow. But if you're looking for your high time frame, we're on the 8 hour. That's a really nice choke structure. That would have gave me confidence that the market's going to continue up from here. So you do your volume. Do double volume. I could do volume down to the low. And that liquidity was swept. So realistically on this, there wasn't any volume to help you, but you've got a nice choke formation. So I would have been looking for an entry around here, but that doesn't follow normal order flow rules. So obviously every validation that you have increases the chance of your trade. So that's why it's important to stack your validations. So that would have been really, for me, if I was looking at taking that trade, I would have waited for a really clean turnover here, a really nice entry model on a lower time frame, but we'll carry on the main order flow. So that's your new lower low. And so again, market pushes up, breaks the previous high. So now we're now setting new higher highs, higher highs, higher highs. None of these are the new higher high until this range is entered into. Yeah. And if we have a look again here, what I would have done at this point, at the point that we break this high, you want to get an idea of where the market could push to. Say you got into this trade and you've been swinging this all this way. You want an idea where the market actually might push to. Draw your fibs. And give yourself two zones. And you can do some volume work on the previous swing if you want, as always. But when you're really trending, and a lot of the markets at the moment are setting new ground, so there isn't any previous chart, especially on some of the chefs, there's nothing to check. So we know the volume is there. So you'll start to see, as you start to line up these fibs, these two fib numbers, and your premium and discount and your 50%, the market just moves. And that's why Manny's such a genius when it comes to knowing where the market's going to, with target TPs and overall market movement. It's these key fib levels with your order flow rules, and you can't make it up. As you start to draw them on, you can just see that the heavy reaction around those zones, and you can trade off these perfectly. I mean, we had a nice, hundreds of pips retracement there, and then it carries on, pushes up. Have a huge wick up, which actually, you notice, sets a new high, and then pull back into the range. So this is where things get slightly more tricky, because here I'd have preferred if that wasn't broken. So if you look at this, that's broken up, that's hit the 1618, we've made a new high, and then we've immediately retraced back in. So draw your fibs on the push. Let me know. What's it look like, guys? Does I need to clean the charts up, and some of these are getting a bit messy at the moment. If you can see, let's clear that fibs. So volume here, would have been my first target, which lines up with the previous volumes. So that would be the 50% zone. That was the first target. And it's broke the 50% zone. The next areas that we'll be looking at is the discount zone, which is these fib levels down here. And my favourite areas would be the one closest to the fibs, which is really nice and balanced there. And then right down at the bottom, or at the base of the zero line. So this is sort of where we're at on gold at the moment. As you can see, we broke it down, and now the target areas I've got is I want gold done its push up, it's broke, previous high, retraced back in, previous zone, and we break the 50%, smash through the 50%, and we'll do the order flow in here as well. But you can see we're making the order flow down, so that's made a new low there. So if that breaks this high, that lower high is set, and we're good potentially to continue down these zones. So this is my two target zones for gold. I think gold, I'm going to go down here before we get any kind of reaction.
And that was the 78 as well.
Yeah, that was basically, it was right down near the 7-8 or the zero line. So they're the two zones I'm looking at for gold.
Gotcha.
Let's have a look. Let me just zoom out to the weekly again, check overall order flow. 50%. So yeah, there's a good chance here because gold's still really uptrending. We're making new high highs on the high time frame, the overall order flow. I think I'm very surprised if we pull all the way back down to here. I think gold has got a very good chance turning around in these zones and going up to those target fib levels. Be really interesting because gold breaking, making new highs, not the highest it's ever been. So this will be interesting to see. I'm not sure, honestly, if I look at the fundamentals, that gold can push that high, but with what's happening in the world and the new currencies or trying to push the dollar out as the main reserve currency, you never know. Gold could really start increasing in value. I think they're talking about using gold as their reserve currency, aren't they? Brick or whatever it was. I'm sure I read that. I don't know if anybody's up on all of that.
I've been hearing about it.
Yeah, I don't know a lot more about it. So this is what I see and what I'm looking for at the moment. And then we go down to 4 hour and look at what the market's currently doing. Internal order flow. But like I said, if the market's too messy or doesn't follow the rules, just start with your current order flow, because anything, the last main swing will help you determine what's going on. I mean, this whole year's worth of, yeah, March.
Hey, Leah, just for the record, you're using your premium discount zones for re-entries as well, like as a confluence?
Yeah, premium and discount zones. Yeah, I look for those for re-entries, which is sort of then internal order flow.
Yeah. I was
So here,
asking. Go ahead.
so here's the point that we're always looking for on the higher time frames, the major chokes. These are, if you're looking to really want to take the market down, have confidence the market's going to come down. Good time frame is the 4 hour, and just look for these 4 hour order flow to be broken. So we had a nice decent choke there, which is step one. And then we just had the pullback into the zone. And if we do some fib checks again, if I look at this last swing, I'll be surprised if it doesn't line up to the 618. Yeah.
Around about almost 38.
So line up to the 618 or the 1.272, 1.3. Sometimes people have slightly different settings on there, but it's roughly the same percentage. It's like a few pips out usually. So, or as long as it's around that mark. And then we're looking for the retrace back into the zone, back into the previous range, which is here. There's the previous operating range. And we've pulled back in, was it the 50%? Almost perfect, the 50%. So we've got a new lower high there. So we've had the choke, we'll break the choke perfectly to the fib extension, previous swing, pull back into the zone to the 50% level. Some nice high highs there, a large bit of volume sat there. And then now we're just working the current wave to see where we're going to go. So I will normally look at my fibs at the point that that is set and we start to make new internal lower lows and lower highs. But realistically, until that's broken, you can't have confidence on where you think the market's going to push to. So just use it as a guide. So here's what I'm looking at the moment. We've just broke that. We're starting to make potentially a new lower high. And then what I like to do is this is where I start to look at fib convergence and what sort of fib levels do we have that are lining up in similar areas. So doesn't really line up perfect there. That'll be internal. So shelve that for a second. I was 50% retracement, so I'm pretty happy that that's not going to pull back. I'm quite confident in that. So I really do think the high time frame analysis is right on gold. I do think we're going to carry on down. And this, if I'm looking at this swing, that's close to the 1.2, and that's close to the 1.6, so that's giving me good confidence. And if I two double, so yeah, we've got multiple fib levels, more so on this bottom level. So I think gold could push all the way down. We get the right one. I thought USD could go strong with gold, push all the way down. But looking at the way the fibs line up off these internal waves, these two zones, potentially this zone are zones of interest for me on the high time for gold's target areas. Now, in terms of swings, in terms of entries and daily trades, these are obviously just main target zones. This is what I look for on the high time frame. I try to work out where's the market likely to move to, and then you can just repeat the process on the lower time frames. So if we look at the hour, you see sort of where we're at. We'll just do this last swing. So I won't do all of this because there's loads of order flow here. You can just see how it follows suit mainly. But if you just look down here, we've got the last decent choke. Choke was broken. It pulls back to the 50%. And then we'll work from there.
Mhm.
Save between them all. So we break here and then pull back. Again, always try to look at doing fibs. Get an idea. That would have been around my target zone. It pushed up to 2. And all the way up to the 2618. So, and this didn't pull back here really. So in true order flow rules, that's the last proper low that we've got, and that's the last proper high. So this is where it becomes a little tricky. So we've pushed up. We've not had any retrace. We've got your new high here. And that high is set at the point we come back into this range. You see that. That's where I'm a little more specific on order flow when I get into the current time frame, because I want to know when my lows are and when the market is likely to break. So now internally, because we're breaking into this range, I'm confident this market is now on a proper downtrend. So new higher low potentially, lower high even, lower high created because we broke this zone. So we're now going to be looking internally, where's the market likely to go before we get a retrace or entry. So again, I'm doing my fibs.
Do you ever use like the 2618 or the 3? I'm sorry, the 272 or something like that?
No, the ones I use Elliott Wave. I've dropped it a couple of times. Elliott Wave theory.
I saw it. I was just wondering, did you ever use the extensions like the one?
I use the two. I use the 200%, which is a good one. I use the 2618, and I will sometimes add on the 3618.
But not the 2272, right? I just
No,
use the 2618 on mine, but I was just wondering, do you ever use those other ones?
I used to, but
Mhm.
after much using, there was just too many fibs on there, and it gave you too many potential zones, and the highest chance of the best entries are just these few. I do like the 3618 when we're looking really on the high time frames for real big extensions, and these two are nice, and these are like extended waves or big moves.
Okay.
So that's why I have those on. In general, I like to stick these two.
All right.
These two. So, and that's why I have them on, because if they line up with other key areas of volume, it's definitely worth looking at. We're considering here. Where was I? On to extension, that's it. So realistically, if we look at this here, there's a potential zone there, but I'll look at the volume. That was that nice big reaction after 50%. There's me a second, I should geek out a little bit if I go silent.
So that bottom one at that 2 or 3618, that would be your final target.
It's a nice, yeah. So I'm just I'm gonna pop that on because there's a nice amount of volume down there. Some good points of control, quite like that, and it lines up with my 2618. So quite like that. So let's just highlight that zone for now. But looking at the market here, I really like the 618. There's a bit of volume here. There's a nice big wick there. We're at 1905 as well. So I really like this area for order flow to sort of hold. Is that a big wick that we've got there? Yeah, so we've got a rejection wick, which is interesting. So I think that we could pull back into that zone before it continues on, and we've got news coming up, so that's definitely a possibility. So, 1.618. So what I would do now, remember, I'm going to draw the fibs to where the 1618 is. I think that's where we're going to turn around. You can use the wick if you want, sometimes body to body if you can't make it work, but I'll go wick to wick.
Yeah, it was like a little order block on the lower on the hour. Yeah.
Like to look and see what volume we've got. Let me just move this fibs out of the way so we can see. A lot of volume there. We've got a huge FVG that's,
Oh,
you
yeah.
couldn't say it's filled on the high time frame up to there and almost filled up to there, but I do like that. I've not even included all of that in the volume.
That's perfect. Perfect. Let's see.
50%. So again, I'd be interested in the 50% FVG mitigation block, and also somewhere around here. Well, they're my two favourite zones on here, and that's all based on the fibs in the premium and the 50%. I like that FVG area. I do think that that's primarily filled on this time frame because that's the last proper swing. Have a look at some internal order flow here, see if we can sort of pick up where the ideal choke is to confirm that we're going to get that pullback. So we break the low. That's the 50%. So for me here, if that high gets broken, I think we can take it all the way up to the next order block. Internally, in order to start getting signs that the market's going to be going up, we'll be looking for these two highs to be broken. And I'm pretty certain that if you just start looking at your last swings, let's just start to see everything lines up to the 1-2 and the 1-6. So we'll see if gold holds this zone. Basically, for me, I think we were talking about this zone before, weren't we? The 1905 zone before the session. It's funny how that's turned out, bang on that 1905.
Yep, we was talking about that.
See, it's broke below here, so we've got to be conscious of this. If you look, that's gone down to the 1.618 again. You just sort of start to see why I like the 1-6 and the 1-2 so much. It's such a good zone for target for extensions. Once you've had that low broken, that as an extension target. And people, if you're struggling to sort of set your TPs and knowing what to do on your TP target, if you just go on the last swing before this structure's broken, or at least estimate it. So if you're entering up here, you think that that's the part of the way it's going to go down. That's the point that you're entering here, so you haven't seen if that's broken or not. A good target TP initially. Partials you would want to take somewhere at the low, but your target TP would be the 1-2, 1.618. As we start breaking through that, you've got real confidence that that should be at least your target TP swing here. All right, so you're quite confident you can move to break even, you can let that swing. Great for target TP. I don't know if any of you guys use that as well. So I know SM does. Me and SM trade very similar, but I think SM uses those two for target TPs quite a lot.
Yeah.
I personally don't. I use structure.
It's a combination of structure, volume, and the fibs because they all, when they all line up, it's pretty fire.
I almost never use volume except for my zones, for real. That's like, I just do a little quick volume profile check, and then once I see okay, volume is actually supporting my zone, then I got a strong confirmation. But other than that, it's like I don't know. I'm not really that deep into volume like you are, Leon. I'll be real.
Well, I normally do what you do, Florent, but I've started to adopt the volume profile. I mean, from the volume and as well as the fibs lately.
Just in order to find out where do you think the market's going, that combination of the order flow rules with your fibs and your volume really does help, and you'll just sort of notice when we've seen as we've gone through it, is you start to draw your volume on and look at where your fibs lie and where the market reacts from.
Right.
It's always the key levels of volume, and if you've got all that volume there and then you draw your fibs on and you get a nice key fib level at those peaks, it just gives you confidence, and you'll notice that it reacts off there so much. So just worth having a look, especially if you want to do order flow in detail on the high time frame to figure out where price is going to go to.
That's actually really good, especially for longer term trades. So you have a little bit more confidence to stay in there other than a scalp. And so that's very
it really does help. All of the markets are not always that clean, and sometimes it's hard. But at the moment, gold really is following the order flow rules quite good. We've got a really nice high time frame choke, which we haven't broken yet. Until that high is broken, the market's still going down. And we're breaking up here, so let's zoom in again.
And it's so important to have like a checklist, your confirmation checklist, and you follow it, because that's just key. That helps you to become a more disciplined trader. How many of you guys out there have a written list for your confirmation checklist?
Get one down and follow it and adapt it as you review your trades. That's really key as well. Literally review your trades and see because you'll always be changing and adapting things, and you might take a trade that doesn't quite meet your rules. And then as you look back through your data, you'll be able to see, well, yeah, every trade I took that didn't quite meet that rule hit break even, or didn't go to or hit stop loss, or I changed that and actually I found something else that gives me the chance that this actually goes to TP, or it moves further, or it's a better entry zone. So for me, what I'm doing now is where source comes into play. If I become quite lazy because these 400 and these EMAs do take into account a lot of the market structure, a lot of the break. So for me, you see where the 400 is right now. I'm on the 15-minute, but this is for the 5-minute. This is the 5-minute 400. I have that showing no matter what time frame I'm on. Whenever it loads.
Philip wants to ask, or can you just remind them what time frame you start on?
I usually start on the weekly or the monthly. It depends on if I can see. The weekly is usually good, and the reason why I like these time frames is, let me hide source. It takes away a lot of the noise, and you can clearly see the swings. It helps you start getting the order flow of where the actual market is going. So instantly looking at that high is broken, we pull back into the range, so we're effectively still on the way up. And you try and look at that at any lower time frame, it becomes very difficult. The daily, there is even more swings in there. But starting the weekly is a good place to start. You can go to the monthly. Some of the pairs do go back to the 70s, so the monthly sometimes you need to dip it to see it properly. But honestly, that's full geeking out. You don't really need to do that. If you just want to start practicing, just drop on the weekly, zoom out, give yourself a rough idea following the basic rules of you've got to break the previous high or low to start setting the new high, but that new high is not set until we hit that previous range. So bang on the previous range, or ideally enter it and come back to those deep pullback areas to really give you confidence. And then you just look for your extension. So basically, this is how I've got gold and a few pairs set up, and I'm just looking to swing. I say I swing between order flow and volume. but it's all one really. Let me go back. I'll just go overview on this again, and then I think I've got one more that I did that I could show you. So yeah, so for me, for my entry model now, is I'm looking for these structures to be broken. And you can also like move front. So I think it was we said you can look for your channels as well, make it easier. Some of the things that I thought usually just add in is just where the trend is, but I'm looking for these highs to be broken. But what I will want is I'll wait for these highs to be broken. And then I'll be looking for my 400 break and retests as one of my validations first.
For your buy.
Yeah, for the buy. Now, if this holds here and break starts going down, then we'll probably get a retracement back up to the 400. So if these highs do not get broken, so we don't start to set new highs, we don't do the choke, take price back up, then you can start to take price, continue taking price down. So if this breaks that low again, then I'll be looking to continue to take price down. And just follow the same process. So you just do your fibs. That's how I've not got the swing yet, and then you'd be looking potentially for the next extension zone. But also, don't forget to look at your volumes at your LB. Don't just go off fibs. Try and at least get 2 or 3 validations for a target area. Structure, volume, fibs. You just combine those together, you'll find the key areas in the market. So you can see I've done EU. I was getting ready for the order flow. I started geeking out on the charts again, so I'm going to go back to all my pairs and just do some order flow and look at some of the core zones. So I got very lazy with it. I just normally do this internal structure, but it really gives you a good idea of where the market's going. We can't see what happened before that swing, so just ignore that and start from here. You can see it just follows the same process. Traces up to the 236 or 2. What's the other one? It's like 238. I can't remember. It's same as the 884 and the 886 and the 386. But basically, I use these off the Elliott wave formation, but they're very similar. The 386 and the 286, but it's just percentage wise. I use these because these are exact opposite to the others. But anyway, so yeah, so it pulls back up into the premium zone, and then we extend down nearly to the 1.2. Break below, and we pop back up into the premium zone. When you start to look further, there'll be a nice load of volume sat there, and then.
Hey Lee, there's also there's an indicator by I don't know if it's Lux Algo or what, but it gives you a it's like it'll draw up your premium and discount zones in it has one like an area for your golden zone, but so you don't have to I don't have to draw it every time. I just
we should drop that in the chat to help people. I haven't checked it out, to be fair. What I always find is how I've worked is I geek out on the charts and done everything manually. So if somebody takes all this away from me and I don't have the indicator, I can do it anyway. So this is why
I think this is phenomenal that you're showing them. Like, you have to know what you're using and how you're using it. So this is
to check an indicator, don't you? Because you don't know. Exactly. Sometimes indicators are only going off. It's a computer at the end of the day, and it's going off certain algorithms. Sometimes you want to check with your eye and double check, and it's just good to see where these extend to. So obviously, if I was trading from here, these would have been my 2 areas of interest, the 6 and the 618, and just. You can't make it up. But it won't
be able to give you those extensions, so you're still gonna have to do it. You still should do it, like you're doing it. But I was just, yeah.
It's so good, so that doesn't count. You see how that's not a true lower low because it's not broke that zone. So these are just internal swings. Now, when we get down to internally and you're trading off these, you've got all these internal swings and they all follow the same rules. So the 50% there, that'll be that's probably a 1.6 extension again. Yeah, 1.6 extension again.
That's crazy.
So this is why I use those. So basically, yeah. So that's the new lower low because we break the zone, we pull back up and do a quick fib run and bang at the 50%. Let's do a quick volume run. I'll do it to there because that's going to be the key volume. And we've got two volume clusters. We've got the one which is up near the premium zone, and then we've got small cluster here at the 50%, which is what it's bounced off. And then the same process again, internal swings, no structure broken, structure's broken. We've pulled back in. And let's check that. That was down to the 1.6 again. Extended, we've pulled back into the zone, which is going to be around the 50%, which is bang on the 50%. Let me just bring this up so we can see clearly. 50%. So we've got a good potential here. This could hold or pull up to these two zones. So this is when your internal order flow comes into play because you've got these key zones. You've got your 50%, and then you've got your premium at the top. Do it the right way so you can see the premium. Two premium zones. So I'm going off that previous high, not this high. We're going off the actual previous high to confirm out where that's likely to fall to. And then I'm just going to do the volume on this line. And you can see the two volume hits are bang on the two fib lines. And then we've got a nice consolidation of volume here and at the 618. So these are all interesting zones that price could push to. This is why the internal order flow then really comes into play, because you now, I followed the process up, still higher highs being made. Yeah, we're going back into the zone perfectly. And if you go through and test all these fibs again, they pretty much come out to the 1.2 or the 1.618, and you start to notice that they start to line up with your high time frame zones. So it really gives you confidence on these extra zones as you lay the fibs over the top. Don't get me wrong, it's a lot of work initially, but once you've done it all, I mean, FM will contest to this because he does a lot of this himself. You just sort of know. I sit here and look, and like I said, I knew that was going to be around the 1.2 and the 1.618, and you know that that's roughly 50% there. So you just sort of start to see them, and you just do a little bit of layover just to check. So practice makes permanent, guys. Something Manny said at the start that stuck with me. Practice makes permanent, and you just go auto mode. You don't even need to really think about it. A lot of the time I'll get asked, why are you looking at that zone? And I have to backtrack and work out why I'm looking at that zone, because your eyes just gravitate to it. You just automatically see it. So then we break down to what's going on internally. And it's just exactly the same process. Just obviously, if you start doing this without looking at the higher one first, you don't know where price is going, but it also gets really complicated. When you start, even if you just go through the pairs and just do it on the daily and the weekly, it'll start to help you to see the rules and understand it. And you start to look at the fib extensions and the volume. And then when you get down to these areas, you just sort of see it automatically and know. So realistically for me now, see how I've got these are the key swing points for me that the market needs to break to confirm that we're going to push up to those higher fibs I had on the deep retracements. If these are not broken and we keep breaking these lows, then the 50% is going to hold, and we're going to 50% is going to hold, and we're going to carry on down to the lower levels. Let's have a look on the weekly so I can see where we're going. So we break the low, we pull back up. If this holds internally, then we're just going to push down to one of these two zones. obviously price can change at any point and the uptrend can continue. So always keep monitor of the big significant swing lows. Order flow does change, as you can see, order flow changes. Normally, you'll get a really high time frame choke break to give you that indication. So for me on EU, we're at a bit of a tricky area. Ideally, I'd like to see it push up to one of these, but in order for that to happen, I'm going to start seeing these get taken out. See how we've had one taken out there? But I was just looking at, as I was looking at for a trade, I was lining up for a sell here, and it went perfect. Totally forgot about that. Another little 5-minute source setup. But here we had, see how that choke? We've got a choke here. Retrace back. So, lip UM area. By the time you're banking for that price to go up, but all you're really guaranteeing on there is a decent retrace back to the high potentially. Unless that carries on going and we break this next one, until this is broken, I've got no confidence the price is going to carry on all the way up to the high. So for me at the moment, now that low is being broke, there's a good chance that EU could carry on down, you know. See what this next lot of news does. Has the news dropped yet? Second round.
Yeah, time ago.
Oh yeah, we just have a New York Open in 8 minutes.
And
And that GN trade has left the building, man.
oh no, I missed all the trades geeking out. I've been in eChef. I made a bit of a mistake on that eChef entry earlier on in the week, and oh god, it was one late night on Tuesday. It was just coming up to spread hour, so I took my stop loss out, and somebody obviously was bugged my computer because Euro just went super strong for the last 30 minutes and literally took me into a huge drawdown. I did something naughty and left my stop loss out because I was confident it was going to turn around, and luckily, I'll show you where I was in. This trade's been giving me heart failure all week. I was in here for a little scalp. And I was in here for a little scalp. Return on source, so you can see I was just going for this. I had a little break here. I was just going to go for a little scalp. I should have moved to break even, but I didn't. And then this was about, look, it's quarter past, so I took my stop loss out because I was going to be AFK. And literally, I swear, the second I took the stop loss out, whoever was bugged my computer just took it, and my actual stop loss was here. So I was massively in drawdown. Don't do that, guys. Hit your stop loss. I was literally having heart failure, but because I'd done my order flow analysis and I was looking, I was confident that we were going to get the drop, and we had a nice bit of accumulation here. And then luckily, if you see,
Marry the trade though.
it's a killer. It's came in and it's still going. So yeah, that was. I've been nail biting that since when was that? Tuesday. So I've been holding this whole mess. So yeah, so the chef sometimes a hot mess, but when you get them right, if I'd have caught that just such a sweet drop. Was what I think we were saying earlier. I think me and SM have been stuck in Euro Chef a few times for like 3
weeks. few days on that.
A few months ago, we literally, I can't even find it on here without going high time frame. But oh god, it was a few months ago, weren't it? I think it might have been up here somewhere. We just literally, when was that? June. I think we were in all of this until it dropped. I'm sure it was this June run here.
Yeah.
But yeah, so this is what we're looking for, and what I like to look for on this. This is why I like the 400 EMA. That's the 1 hour, and that's the 5 min. I use these as a guide. As these two start to turn over, I look for a nice retrace and set up of the clouds. And usually, when it happens, it's usually the right time to get really nice drops. So that's sort of why I'm using the 400 quite a lot at the moment. So yeah, I'm really happy that turned out. That's been. I couldn't sleep the first night it was open when I took my stop loss. Right, I think that's it on order flow initially. I will do some other practice and then come back with some questions, and we can do some more order flow work, I think. And next week or the week after. Or if there's any other element to the market you want one of us to go over, then that'd be worth just making requests.
Start a weekend for trading, right, Derek?
Let's have a look at the chat. So,
I was thinking about
yeah,
that the IG post. Somebody had like a heart monitor, like a blood pressure machine hooked up to them while they're trading for the indicator.
yeah, you know, once if you can get to the point that once it so a good monitor for your trading is if you enter a trade and you're nervous or uncomfortable. Number one, it takes quite a lot of losses and significant losses. I think until you get over that, I think you got to lose a lot to learn to win in trading. Something that me and SM and Manny talk about quite a lot. But if you enter a trade and you're nervous, it's usually because you've not met all your validations or you haven't got your rules down. Once your rules are met, you should be completely happy, even if you go into drawdown, because that's what you've set your stop loss for, because you've taken into account everything, market structure. And I think over a while, we should be able to be hooked up with a heart monitor and blood pressure. It should be fine.
100%.
It's like doing nothing. So yeah, that's why your validations and your rules are key, because once you enter that trade, like for me, obviously that was a bit of a nail biter, but I was so supremely confident that I tripled my stop loss. This is not good practice. I recommend, just so I can say that out there. Don't do that, guys. That was really bad from me. Do not do that. Take the stop loss, re-enter, and go back in. But I did that solely because of I took stop loss out because it was spread hour, but they caught me literally the second I took it out, like 1 in a million chance, and it just pushed it all the way up. But yeah, do not do that. Never bleed your stop. Never extend your stop loss. It's something I did in the start. Always extended my stop loss, and it just goes badly. Take the hit, move away from the pair, come back, reassess, re-enter.
You don't, like Manny says, you don't have to be the best trader in the world. You just need to be the best one of the best risk managers. Like those hedge funds, they don't win a lot. They win way less than we do.
Yeah, I know some of the banks and that have about 50% win rate, but they get they put the trade in, they have their target set, they've done their analysis, and they wait for it to hit. It's something that just takes time, doesn't it? And I think another thing that really helps you is if you're not recording your trades and you can't look at your past 50 trades and know exactly how many would have gone to TP if you hadn't followed it and got out early. That's you really can't figure out how well you're trading. So say if you're getting panicky as soon as you're in profit, and then when you're going into drawdown, you're literally extending your stop loss and you're taking bigger and bigger hits. If you're not actually reviewing those trades and saying, "Oh, actually, where did that go? Did that hit my TP even though I exited early?" Or you can't see it. Something that I found out quite a few way into my trading journey is taking partials early, having a set plan. I usually go to break even at 1 to 1. I take partials at about 1 to 2 religiously, no matter how far I think the market's going to go. And that was because I reviewed all my trades and I looked at actually if I was taking partials at about 1.5, I would be winning 90% of my trades. And although I might only be making like what was it, 50% on top, so 1.5 on top. Actually, when you start adding 1.5%, for example, together over 10 trades in the week, it's much better to grow your account by 10 to 15% than actually be losing, which is what I was doing.
Right. Compound
So,
interest. That's the key.
yeah, compound interest and getting those partials early and protecting your funds, because you can always re-enter if you hit break even. If the market sets back up again, you can always re-enter. But once you start getting into that spiral of losing, you start trying to hold your trades for the 1 to 3, the 1 to 4, the 1 to 5, the 1 to 6s. And that's why I like Trade Assistant as well. I use that standardly. I just literally my trades move to break even and take 1.75 at the moment at 1 to 2, and that's it. And then I swing and I move on to something else and just forget about that trade.
Right. Well, yeah, Trade Assistant. I've been hearing a lot of people talk about that.
Yeah, so take away from that, just review trades that have hit everything, and then just look at where they actually went. If you're exiting trades early at the moment, or if you're hitting stop loss or break even, have a look and see if I actually took partials when I was at 1 to 1, 1 to 1.5. and where would I be? It's usually a bit of an eye opener on how much percent you might have grown over the past month or so.
Thanks.
Anybody got anything else? I've not really looked at any of the charts. I'm just watching eChef as a massive relief at the moment. Because that was not nice to look at in my account, I can tell you for sure.
Yeah, like yeah, revenge trading is a no. I mean, yeah. No,
Oh,
no
I've done that. I've done that way too much at the start as well. I think you have to go through all of these things, don't you? I think, and I do generally find females out there are generally much better traders. They're much more level-headed. They don't revenge trade. They're very rarely revenge trade. Follow the rules, stick to the process. Us boys have a tendency to think we're going to make £1 million and just keep trying to jump in.
Yeah, exactly. Well, hopefully, maybe not. Maybe there's some not revenge traders, but yeah, you're right. Revenge trading is like not the key.
Your head's totally out of the game, isn't it, as well? And you always make rash decisions. Literally get those set rules and wait for it. You'll know as soon as you enter a trade, if you haven't done your rules and that trade weren't ready, you just instantly feel it. Just recognise your feelings, guys. That's sort of how that was my barometer. If I entered a trade and I'm nervous, I'm like, well, why am I nervous? Because I didn't check ABC.
Does anyone still use Manny's his trade the calculator compound plan?
Compound plan's awesome. I'm tracking that for a little challenge I'm doing on the side. I still use that for my accounts, but with what I like about some of the funded providers as well is they track a lot of it for you. You get a full trading journal, but everybody, unless you are profitable and winning most of your trades, you should be journaling all your trades. If you're not journaling all your trades, guys, I'd say you're not serious about being a successful trader. And if you're not reviewing them on a weekly basis and seeing how many you won, how many you lost, why you won, why you lost, if you exited early or didn't take partials and then it turned into a loser, how much you would have made if you didn't. This information will, number one, not only turn it into something serious, like 100% serious for you, like a business, it will also be a massive eye-opener. You'll look back and think, oh my God, I could have made 6 figures over the past 3 months if I'd have just been taking small partials and moving to break even early.
Or following your own rules.
Mm-hmm. If I'd have stuck to my rules, yeah,
right, it's nothing worse than that. It's just like, whoa.
I hate it. I still do it now. I think that trade's going to look really good, and I'll just enter before I've had my final confirmation. It'll turn around and slap me. I just think, you know your rules.
Hey guys, I want to show you guys something. Like what Sandra, hopefully she don't mind me sharing this on our team. She created this well, I'm waiting for her to say something like yay or nay, but I don't think she'll mind. Share
You sharing
yeah,
now.
I'll share for just a quick second. I just want to share this part. Let's see. What screen is that? Number 1. Can y'all see my screen?
Mm-hmm.
Oh man. Okay. All right. So she created a like a template for it to be on our screen. So literally you have your trading plan right here. Let me make it bigger. Let me go to a clean chart. Let's see this one. And add my indicator. She made an indicator and wrote our rules out for our trading plan. I think it's pretty dope. Let's see. SGT rules. So there you go. If you forget your rules, if you forget your trading plan, that's on you. So she literally made like she wrote our rules out, and so now let's remember your rules. And so there it is. Trade your plan, plan your trades. So thought that was pretty dope. But yeah, that was all.
Sweet.
Yep. But Lee, do you have anything else? Or anybody else have any questions?
No, the GM that I had, that's about to hit TP there. Hold on, let
I
me
will
share
do
this.
some. I didn't look at NCAD actually. Where did NCAD go? I'll do some. I want to look on the charts anyway. I want to see if I can get another trade today. If you can see why I was so distracted at the start, guys, it's because I was flipping having heart failure as the interest rate news was coming up for that N share, that E share. So
GM.
actually, ACAD, NCAD went perfect, guys, straight off. It was a risky trade. I wonder if anybody of you took it. And that's another thing, guys. Remember, I wanted to say actually, the Market Watch team hugely just wanted to give out their appreciation and thank everybody and all the kind words that everybody keeps saying and staying on to support us. It's quite a big thing. I don't know if you guys have tried giving out trades to people and stuff. It's quite a big thing, big responsibility to be giving out trades. And yeah, we appreciate the kind words and support. Just make it all worthwhile.
Yeah, the other one, this GM trade. And you know what's mad, yeah? I didn't even want to give it, but there was an entry in it, the 2-hour entry. That's where my red line was in it. But I wanted to give people obviously the premium zone in it for like a tighter stop loss. But if I was trading, I would have entered where my red line exactly was there. Literally, so upset about this, you know.
Well, look at it.
I was like a 14 pip, 15 pip drawdown. Would have been in profit now, 66 pips.
Yeah, if you flick over to NCAD as well, so see NCAD when it's pulled back, but it was only a little scalp, but it would have been a really nice.
Yeah, I've still got NCAD to continue downwards, you know, because on a
it will
daily,
do. Oh, for sure, mate. For sure, in order flow wise, I'm taking it down, and it's setting up again. To be fair, but just let the news settle. But yeah, it would have been a nice 1 to 4, really fast 1 to 4, one candle, so 5 minutes, 1 to 4. That would have been a nice little payday.
5-minute candle. Jeez. Oh, this weekend. Yeah. And you know what's mad? I had the zone as well, you know.
Yeah. Well, this is what you find, mate. This is what I found with the 400. You'll notice, you know, when you were talking about GN, you know, that 2,000, 2,800, 2,900 or something, was it? For the entry? As it was, the 900.
Oh, what, the GN one?
The GN one, yeah, I was going to say as well, that was where my 5-minute 400 was just kicking into. So it was literally, that is why I use it so much. What was the entry that you had?
The entry that I had, if I would have gave that out. Oh, the one that I gave out was 2.10900. But then the other 2-hour entry that I saw was 2.10460 area. So I probably would have rounded up to 500, 2.10500. Yeah, but
so NCAD is still on the book, guys. It's bouncing off that 400. It looks like it might go down again.
Yeah, NCAD will continue down for sure. But I'm gonna wait for it to break these lows. When the market takes these lows and it's like a pullback, then I think I'll take that down. So, but at the moment, there is nothing else apart from AE that I just took. I'm trying to take AED, USD back up here. So like a 70, 80 pip. What can I give for AED? The only thing I can give for AED USD is on the 5-minute. If market eventually ends up breaking out of this high, then just look for like a break and a retest, and then to continue taking it up. That's what I would say with AED USD. But apart from that, the main trade that I wanted was the GN one, and that one is doing a runner. Yeah,
such a nice trade. They're the best as well. I love no drawdown.
Yeah. But the AED USD, just look out for that one. If market breaks above 6,600 area, we'll look for like a nice break and retest. I had this on as well. Let me see what market breaks for you. But yeah, man, that's it really for today.
Yeah, I'll get on the market charts now and have a look, and we'll post anything that we see.
Thanks, David, for posting that PDF. That was very kind of you.
Oh yeah, David. Yeah, man. Big up David, man.
Yeah.
David. Yeah. Nah, thanks for that, David. Yeah. We saying when we're back? What, tomorrow? Monday, Tuesday?
Monday,
Oh,
I'll
yeah,
post. I'll redo a post. We'll do the same Tuesday, Wednesday, Thursday next week. 1 o'clock UK time, 8 a.m. CST. Yeah, it is
Cool.
8 a.m. CST.
EST.
EST. I don't know. I'll just put US time. I don't know. I'll have a look on
Alright,
Google.
no
Make
worries.
sure I get it right.
I've got the cheat sheet too. Oh, tell him send that. Send that. What was the cheat sheet? Oh, the breaker block, the LBs, the MBs, and all of that. I think that's what he's talking about. And send that to the chat for the people.
No.
Oh yeah, that's what he's talking about. Yeah. I'll put them in the chat. Okay, cool. Thanks. Well, I hope everyone enjoys their weekend. Don't get too drunk and just continue learning. And obviously, we'll post any new setups in a
Don't
smart
trade
money.
drunk. That's not a good idea. Don't trade drunk. Don't
Yeah,
trade
don't trade drunk. Don't kill me. Imagine trading drunk.
That's not a good idea. You just be sad the next day.
You know when you be
300
trading,
plus.
you be trading during spread hours.
Did I tell God? Oh, don't trade off your phone. If you like me, don't trade off your phone. I never do. The one time I did, I think I did tell you, I put 75 lots on instead of 0.75 lots on a little scout.
Yeah.
I did literally. I was like £500 fees instantly, and I panicked. I panicked, closed out of it, right? And then it went and flew. Oh, literally.
Oh man, you would have made a killing.
Yeah, an absolute killing. I done 5 lots, and it literally was an A card, and it flew. But I panicked because it had wiped my account. I think it had gone back to wipe my account out, so literally, and that's like I didn't even see. I was break even, and I just closed it. And it was like 5493 fees or something. It was awful.
Jeez, yeah, especially them swap fees. Them swap fees ain't a joke, man.
Wednesdays last night was horrible.
Wednesdays,
I thought I got did, but you got really done. Jeez.
Oh, my one was worse. Yeah, I mean like £800 of bloody swap fees at the moment.
Yeah, I was moaning. I had 100, and SM was like, "That's nothing." It was like £800
Yeah. But yeah, everyone, man, thanks for today, man. It was nice catching up with you lot. And obviously, next week we'll go again. Enjoy your weekend and be safe.
All right, bye guys. Have a good
Bye,
night.
guys.
Bye.